Okay, we're live.
Hi, I'm Debbie Lucci from the Deborah Lucci team, William Raveis Realtors. We're about 35 minutes north of Boston. We're a real estate team. We have Joanne D. from the team today, Angela Sweeney, Mackenzie Cormier, and we have our special guest, Joanne O'Keefe. She is with William Raveis Mortgages. And we've got a lot to talk about today. And so would somebody open up, ask Joanne a question and see?
Joanne, I have a question. I think it's on a lot of people's mind is the Russian invasion. It's going to be affecting obviously global markets. And how do you feel that will impact interest rates?
Yeah, I mean, it's an excellent question, and it has been, the hot topic today. It's what's moving mortgage rates, it's what's moving bond rates and stocks, everything right now. So anytime you have a significant global event, which this certainly would qualify as a significant global event, along with a terrorist attack or a national disaster, these are all things that can move the U.S. markets. It's a challenge to economic growth. It can disrupt supply chains. We depend on that area for fossil fuels and oil and consumer goods. So all of these factors do come in and affect, what happens in the bond market and the mortgage market. So what we are seeing this morning is the bond market, which is the mortgage market, very closely follows the bond market. So the bond market yields were down this morning, not significantly, but they were down. And the mortgage market was also down. So the interest rates were slightly lower this morning. So our interest rates were lower in some cases by about 0.1%. So, which is great. So in some cases we were, able to quote rates that were in the threes again, which is great. So, but whether or not this is going to be sustained, I don't know it. I mean, it's all going to depend too, whether we get drawn into this conflict, which could be a long-term thing. And that would affect interest rates as well. I mean, they could come down further on that. But I think it's not a shock, I think, that they did invade, and we have to see how serious they are about this and see where mortgage rates go from there. But I can tell you we've had a lot of volatility in the market today. So like I said, we did open up this morning with lower interest rates. They seem to have leveled off. We did not get a rate change today, but we are back at levels in terms of the bond market and the mortgage market to where we were seeing yesterday afternoon. So, I mean, it remains to be seen whether or not that will flow into decisions on what the Fed will do, in March. So and how many rate changes that they're looking to do. So
what are the rates today, Joanne?
So the 30-year fixed rate, I was quoting one out this morning, and if you had excellent credit and you had a large down payment and it was a purchase, we were at 3.875. So, and we've been anywhere from there to 4.25 over the past several weeks.
Okay. So something that has been coming up a lot lately with this crazy, heavily favoring sellers market are appraisals and people wanting to waive appraisals.
Yes.
So what percentage would you say that people are putting down that they should be comfortable or waiving it, deciding on their own to waive it, or would a lender decide to waive an appraisal?
Yeah, if you're getting a mortgage, it's really the lender's decision whether or not you can waive that appraisal. So we do have an appraisal waiver, and the way we determine that is that the loan application is put through an automated underwriting system through Fannie Mae or Freddie Mac, and they come back to us using their own market data. A lot of times it's, previous appraisals on that same property, and tell us whether or not the amount that we have in there for the purchase price or the estimated value matches what they have in their system. And if that's the case, then they will give us an appraisal waiver. It's called a property inspection waiver, PIW. So that's the only way you can do it. And you really won't know that until we put it through the system. So people can waive their appraisal, certainly if they're paying cash, that's their prerogative. But if you're getting a mortgage, you have to, the lender's going to dictate whether or not you need an appraisal or not.
All right. So Joanne, if you have if you have a $1.3 million offer and you're only financing 400,000, I mean, how long does this take to go through the process? And, isn't there, because usually they just waive it. The buyer just waives it themselves.
Well, so they might be waiving the appraised value. Is that what you're referring to?
Yeah.
Yes.
I think it's
Okay.
different
Yes.
for the
Okay.
buyer choosing to do it.
Pardon me. I
Okay.
didn't follow your question. So, I mean, it's really going to depend on whether or not they have the cash to make up the difference.
Right.
Mhm.
So, and it's a discussion that they should have too, with whoever they're buying it with, to see whether or not, do we want to free up the cash if we have to? Do we have another alternative to, make up that difference? Or do we want to keep the same loan amount and now have private mortgage insurance? So there's certainly options to do it. And I've had very few, but I did have one in the recent past, and they wanted to keep it as an uninsured loan. They wanted to keep an 80% loan to value. And as you know, we're going off of both, either the lower of the two, the lower of the purchase price or the appraised value, when we're determining loan to value and waiving, whether or not you need the presence of private mortgage insurance. So they chose to put more funds. They had it. They chose to put more funds into it so they could avoid it. But they really have to do a little, soul searching and say, or, I mean, I think you're probably seeing too that there might be caps on it too. So somebody might say, we'll cover, differential in the appraisal if it's up to 50,000 or something, will be the responsibility of in fact, the one that I'm talking about, that's exactly what they had. It appraised 20,000 less than the contract price. And they were willing to make up the difference.
Joanne, are there, I've heard that the appraisal guidelines, like the actual appraisers guidelines, are changing or have changed. Can you speak to that at all? Is that
Yeah, I mean, it's
more difficult?
it's pretty well, it's pretty new news at this point. It can be viewed as great news, really, in some respects. It hasn't been implemented yet, and they're talking about March. So Fannie Mae and Freddie Mac are now coming out with guidelines saying that that they will accept desktop appraisals. And a desktop appraisal is really an appraisal done without an inspection on the property, or without a physical inspection on the property. So they're using MLS data and tax data to determine the value. So Fannie and Freddie are going to be accepting these. And it's very unclear whether or not all lenders are going to be participating in this too. So they're going to be accepting these, but they have to do a I'm probably not going to get the term right, but it's a floor plan. So, which may not be available if you go to the, town assessor's office or something. So they may have to depend on, the broker to give them the floor plan. So it's not clear how. So appraisers are a little uncomfortable with it because it's the unknown. They don't know how they're going to come up with some of these floor plans and justify and feel comfortable doing an appraisal without physically seeing it. So that's one of the changes that's coming. But again, I don't have all the details on that, Joanne.
Okay, thank you.
I would think that the Matterport could help with that.
I'm sorry?
I would think that the Matterport tours could help a great deal with that. Those are photography that we do. It looks like a dollhouse. The back of the house is taken off with they have floor plans, and the appraiser can really physically walk through with their mouse.
Yep. And again, so the appraisers are a little uncomfortable because they would have to depend on outside sources to provide them with that information. But that could be excellent information for them. And I think the key for mortgage lenders and for buyers is this is a less expensive alternative. This is a quicker alternative. They don't have to go out to the property. So that saves time, that saves money. So, but this is all in the very beginning stages. We don't know exactly how this is all going to pan out.
Which is interesting because I've already had a desktop appraisal happen for one of my buyers.
Did you have one? Yeah.
Yeah, it may be back to the fact of, the percentage that they were putting down. So maybe the lender felt so comfortable, that they were putting 50% down.
Yeah, and desktop appraisals have been around, for a very long time, for sure.
Oh, okay.
They were used more prevalently in home equity lines of credit, for example. They were called a drive-by. So they don't physically inspect the inside of the property.
Mm-hmm.
What was the loan to value on the property that you had, Joanne? I mean, excuse me, Angela.
As far as what percentage should my people put down?
Yes.
It was 50%.
Okay. Yeah. So that could have something to do with it. Absolutely.
Yeah. Well, that's what I figured. I was surprised. I was waiting and waiting. I'm sorry. I was the listing agent on that, and waiting for the appraiser to get in touch with me. And finally I called her and she said, "Oh, it's done. I did a desktop appraisal."
Okay. Fantastic. I mean, the other alternative to that too is, the appraisal waiver.
So Joanne, for the appraisal waiver, do they have to have a certain percentage down in order to get that waiver?
Not necessarily. It's going to go on the market data that is in the system. And it's not for every transaction either. It has to be a 1-unit property. It can be a condominium. It can be a single family. You can do it on primary residence, on second homes. You can even do it on investments, but it can't be a multifamily property. So I've had them, I would say most of them are uninsured loans because you have to have that second level of agreement with the PMI companies. They also have to agree that we don't need the appraisal on there as well.
So Joanne, let's talk about the difference between a pre-approval and what William Raveis Mortgage provides.
Sure. So a regular pre-approval, the client completes a mortgage application and we run a credit report. We collect information on their income and assets. It's a full, uniform residential loan application, the same application that you would be doing, if you were applying for a mortgage and you had a property, a signed offer on a property. So, and then we'd run a credit report. So the only thing that's really verified, and that's how they're making their decision on how much you qualify for. So the only problem with this is the only thing that you have truly verified is the credit. So that's the only, and that sometimes these are called credit approvals. So William Raveis will take it a few steps further. So to do a certified pre-approval. So again, they're taking the uniform loan application either over the phone or lots of times people are just doing an online application. But we verify the information that they're giving us. So in most cases, we'll ask for a W-2. We need a year-to-date pay stub. In the case of somebody who's self-employed, and this is really important right now, has been for the past several years, really having a good look at their tax returns for the past 2 years, because we have to work with reported income. And sometimes when people are filling out a mortgage application, what they consider their income may be very different than what an underwriter is looking at. So it may be higher or lower. It could be either way. So it's important for us to look at it through the eyes of the underwriter. So collecting that information up front is key. So, and then the other thing we do is we verify their assets. Where are they taking this down payment from? Do we have bank statements that will show these assets? Are there any large deposits we need to address that could come up later to haunt us because they can't? We have to source all funds that are large deposits. Do they have enough reserves? If they're using their retirement funds for some of the down payment, we need to see the terms of the retirement. How much are they vested on? How much can they take out? Are there monthly payments to pay it back if they're taking a loan against it? So these are all things that, we really delve into and really focus on so that we don't have any surprises coming up in the end. So we truly can offer a pre-approval that's really just subject to an appraisal and a title search. So, and obviously if it's a condominium, we need to get condominium documentation too. So they have to identify a property, get a purchase and sale, the appraisal, and the title.
So what should you not do as a buyer between the accepted offer and the closing?
No new cars.
Don't take out any new debt if you can possibly. And people get excited because they are buying this new house. They want to buy new furniture, or they forget that, I probably shouldn't, co-sign an automobile loan for one of my children or something like that, because they're not thinking maybe that's going to come up on their credit. It certainly will. It's in order to safeguard everybody's, time and money and deposit funds, you really have to be careful on what changes you make. And that also includes, changing your job. Believe it or not, that happens. And that's not to say you can't go through the whole process and, we can flip the employment information and that's fine, but we just have to be aware of it up front, and you have to give us time in order to do that.
Okay. So what if you change jobs, Joanne? I mean, do you have to be at a job for 2 years? Can you, until I get this mortgage, do I have to stay at a company I can't stand anymore? I mean,
no, you don't have to be at a company for 2 years. We have to see a 2-year history of employment, unless you're in school, or you're in a trade program where you're training for, previously, if you're training for something and you're in that job for a year or so, it all, it makes sense. But we'd like to see a 2-year history of employment. So if it's similar employment, if you go from W-2 to W-2, we can use that income. That's not an issue. If you go from W-2 to 1099, that's going to be an issue, because now you're somewhat self-employed. So we need to show a 2-year history of your self-employment. So, but going from like job to like job, that's probably not a problem.
Okay. So another hot issue right now is rent back. So, but it affects people's loan if it goes over 60 days. Is that correct?
Yes. Yeah. And it really depends on, it's how it's written up too. You have to be careful how the attorney writes it up as well. But you can do it if it's a 60-day period,
What if it's over that?
Right. It goes from being primary to investment?
It could go to investment, and there could be an adjustment to the interest rate, hypothetically.
Right.
So I had a horror story several years ago where it was a bank that is kind of being known to be difficult with, and we're not going to mention a name.
But we all know who it is.
We know. And we don't like them. So it was the day before the commitment was due, and I get a call. I'm sorry, he doesn't qualify.
Oh, yeah.
And it was supposed to close, I think, less than 2 weeks. And it was due to gift. He got a gift and the gift was coming from outside the country.
Okay.
It just seems to me that would have been something that should have been checked on earlier in the process than waiting until the day before the commitment.
Yep.
Absolutely. Yeah. Especially something because you do have to verify the gift funds as well. So there's a gift letter that's involved that's signed by both the donor and the buyers. And in many cases, we have to show that the donor has the ability to give the gift. So they may have to show a bank statement. They may have to have a letter from their bank, but something that's coming from overseas should be addressed way up front, because that could take more time. It's going to be more questions from the underwriter. It shouldn't be left to the last minute. That's for sure.
So if you have gift money from overseas, like what kind of timeline is comfortable for you to deal with that?
Well, I mean, if you know up front and you have a regular commitment date of, hopefully at least 3 or 4 weeks, that's plenty. That's fine. Absolutely.
Okay.
Joanne, I'm going to switch subjects slightly. And I know we were talking a little bit before we got on, and I had mentioned that I was listening to a podcast about crypto and the use of it in real estate. So I know you've done a deal, with crypto, and it's still very, very new. But I'm wondering if you could kind of speak on your experience with that, and also, do you expect this to become more popular?
Sure. No, and this is definitely a good question, because I feel like this is going to come up more often. I did have one in the recent past, and I did research it before I took the loan, and Fannie Mae and Freddie Mac do allow cryptocurrency for the purchase of a home. So the tough part is verifying it. So when you're using funds for down payment, we have to verify that they've been in your possession for the past 60 days. And we have to show a transaction report, either bank statements or a transaction account from your Fidelity account or whatever. So with a lot of these cryptos, people are looking at these on an app. They might, and we can't accept just a screenshot on an app because it doesn't show ownership. It doesn't show a transaction history. It doesn't show the information that the underwriter typically will need. So this is a struggle that we have a little bit with this. So I was mentioning before that, so this buyer had a crypto account, and just by chance, my husband had the same account. He said, you can do an online account. So he made an online account, the buyer, and he was able to print out a transaction account. It's a little tricky because it doesn't have all the information that we would ideally like to have on it. It typically doesn't have the person's name and address on it. It might have just their email, which, that does tie them to the account. The underwriter did accept that information because she could also see transactions coming from that into his bank account as well. So it does have to obviously be, it has to be cashed into US dollars and deposited into, an institution before we can use it for the down payments. But it can be used as a source for the down payment.
Wow.
You just have to document it. And it is, there's going to be a way, and I'm sure as time goes on and this becomes more prevalent, that they will have more, online options to verify this and more, statement type things, and so that you can verify the funds.
Interesting.
Joanne, what is your fastest that you can, with everything going fairly smoothly, commitment to close, from offer to close and offer to commitment, offer to close?
Yeah. So from offer to close, if we can get the purchase and sale sort of signed within a week or so of the offer, that's ideal. We can close in 30 days, and that's not an issue at all. We can skinny it up to 3 weeks, but everybody is scrambling because there's some things that are out of control, which out of our control, which of course would be the appraisal. Most attorneys, especially attorneys that we have relationships with, will turn the title around very quickly for us, and our underwriting is very quick right now too. I mean, it literally is 24 to 48 hours for an approval at this point.
Are you seeing a lot of refis now, or is that kind of gone through?
We are not seeing a lot of refinances right now. No, that has dipped down quite a bit.
What about income property? When somebody has income property and they say, well, the tenant pays me, $2,500 a month, and how does the bank consider income property if they're trying to buy a primary residence and then they're using that income property as income?
Yeah, that's a good question. So we really have to go off of what they report on the tax returns, because with every property, there's going to be cost to carry. So there's going to be cost to run that property. So, and there'll be, deductions that they take for that. So we have to evaluate the tax returns from the past 2 years from their schedule that shows the rental income that they received and the expenses that they've incurred. And that's the amount that we can use to offset the mortgage that they have on that.
Now, I have no idea if this matters anything to a mortgage broker or not, but I'm just going to throw it out there. Deposit link. Does that affect you at all?
It's convenient, I think.
Okay.
I mean, I haven't had it on a lot in the recent past, but I have had it, and it is, rather than having somebody to, copy their check and show it coming out of their account and everything. Certainly we show it coming out of their account, but it is a little bit more convenient.
Yeah, speeds the process along for us. So then we get to the purchase and sale signing faster, and those funds clear
Absolutely.
faster. So then we can get that to you.
Right. There's no running checks around, right?
Yeah.
So you ladies have any other questions for Joanne?
No, this was great, and I'm so surprised about the cryptocurrency. I'm glad that
That's tricky.
It is. It's a little
Mackenzie
challenging.
asked.
You have to have a cooperative buyer, and you have to just document it going throughout the process. We have to show a paper trail of it coming into a regular, bank account into U.S. dollars.
Yeah, this podcast that I was listening to, some of it like definitely went a little bit over my head. I'm not like too familiar with crypto, but trying to get into it a little bit, and I just feel like there are a lot of younger buyers, especially, that are big in it, and are probably going to want to use some of that towards their down payment, and or once they have a lot in there too. I heard on this podcast that the possibility of them buying the house like in full in crypto, and potentially the seller accepting crypto as payment.
Yeah.
So, I mean, that goes like way beyond this in terms of using part of your assets there to as a down payment and go through the mortgage process. But I don't know, it'll be definitely interesting to see how popular it is.
Yeah, I mean, it's becoming a much more legitimate form of investing. So we have to open our eyes to it. Fannie Mae has already said, we're going to accept this as, it's really not it would be, again, they do have to transfer into US dollars, but we have to show a history of it. And they are accepting that is where the funds came from, because we have to source all the funds that come in. So. Yeah.
Mackenzie, what was that podcast you listened to?
I'll send it to you, but it was through Tom Ferry.
Okay, good. I'm trying to listen to that. Yeah.
Yeah, I'll have to listen to it too.
Yeah, and it's one
I'm so glad that
he's a little bit
Mackenzie-
too, which I don't know much about, but so.
But I think we're going to be seeing more of it. I totally agree. And the client that I had that used it for his down payment was a younger gentleman, and good part of his down payment was coming from it. He was a success story. I mean, it can be very risky as well, as we know, but I'm not here to, I'm not a financial advisor, so I'm not here to tell you one way or the other.
When you got all of his information from the online account, I know there's different coins, and obviously the values change on them constantly. I'm sure everyone's heard on the news. Sometimes it's Bitcoin was down for so long, and then it went up. So how does that work? Did the value look the same throughout?
No, it doesn't. It doesn't. Okay. And he was adding to it, but it's just like a stock account. Same thing. Yeah. That goes up and down. You add money to that, you take it out. Really, the lender wants to see, they want to see a transaction account. So because of the Patriot Act, we have to document all funds that are going into a mortgage transaction. So they just don't want to see that it's coming in from a suspicious source. So if we can show a statement that shows a history of it, whether it's going up or down, we understand the markets go up or down. But what we're going on ultimately is the end amount that's transferred into their bank account. That's what we're going to be using.
Got it.
Do you ladies have any other questions?
No, I'm not saying. Thank you, Joanne. That was
Thank you very much, Joanne.
Oh, thank you.
We covered all kinds of stuff. That was great.
Yeah, really.
So Joanne, if they want to get a hold of you, how do they get a hold of you?
Yeah, you can absolutely give me a call or email me. It's joanne.o'keefe@raveis.com. 978-314-1072 is my cell, and I always have it with me, and I'm happy to talk to you.
And we know you're a very hard worker. We see you all the time in the office, and you've done a great job with the agents at William Raveis. So we appreciate it a great deal.
She's great with the clients too. I will say that.
Yes,
thank you.
Knowledgeable and has a great way about her.
Yeah.
And it's nice when you get an offer accepted, that you feel confident with the mortgages. I mean, especially if you've got a multiple offer situation. I think that's critical in this market.
There has to be communication between the selling broker and the loan officer. I certainly call whenever I put an offer in. I call or text. Lately, I've been moving to text because I know that because there's so many offers on properties these days, especially in Andover. I don't want to inundate them, but I usually send them a quick text and say, these are solid borrowers and this is why. Please reach out to me if you need more information.
Oh, that's great.
That's a great idea.
Yeah, that is good. Yeah.
Well, thank you so much for joining us, Joanne. You were loaded with information. We really appreciate you coming on board today.
Okay, thanks very much.
All right, take care.
Thanks for having me. All right, take care. Bye now.